While the world sleeps, billions of dollars are moving silently through digital networks. Artificial intelligence is completely reshaping institutional power, and governments, they are in a dead sprint to control the absolute future of money. What happens next could literally change everything you know about global finance. Welcome to a deep dive into the silent financial revolution happening right beneath our feet. In this explainer, we're going to unpack the institutional land grab, the impending macro storm, and the hidden data showing where the real money is actually going. Let's get right into it. Grounding ourselves in the current data, we're seeing a massive silent disconnect. Right now, the crypto fear and greed index sits at a perfectly neutral 47. Normally that indicates total stagnation in the market. But look at the price. Bitcoin is sitting at a staggering $80,693. There's no retail mania here, no public frenzy, just quiet, calculated buying at the highest levels of finance. To really grasp the sheer scale of this shift, just look at the infrastructure being built while nobody is watching. Visa, the $15 trillion titan of traditional finance, has officially partnered with Lightspark. Their objective? To unleash Bitcoin payments across 175 million merchants worldwide. Guys, this isn't some experimental pilot program. This is the global economy's wiring being fundamentally rebuilt from the ground up. Now pivot over to Wall Street, and the stakes escalate dramatically. Take Jane Street, for example. They are one of the most secretive, powerful, quantitative trading firms on the planet. In just the first quarter of 2026 alone, they absolutely shattered records, generating $16.1 billion in trading revenue. The giants of Wall Street are quietly extracting unprecedented fortunes from all this market volatility. Traditional finance is definitely waking up, and they're moving fast. The $219 billion Sweep Bank is aggressively adding to their MicroStrategy holdings. The $4 trillion Bank of America? They're in an absolute full sprint to hire crypto experts. But the real earthquake here is BlackRock. The largest asset manager in the world has officially flipped the script, rewiring the narrative to label Bitcoin a risk-off asset, a true safe haven. And driving this market is a hyper-aggressive corporate strategy. MicroStrategy CEO Phong Le and Chairman Michael Saylor recently faced a lot of scrutiny over their massive holdings, but the response was totally uncompromising. Saylor straight up stated that if the company ever sells a single Bitcoin, it's only going to be to fund the purchase of 10 to 20 times more Bitcoin than they just sold. It's just a relentless loop of accumulation. This strategy has led to a completely stunning reality. MicroStrategy now owns more than 4% of all the Bitcoin that will ever exist. Just think about that for a second. 4% of a global hard-capped supply sitting in a single corporate treasury. They've basically abandoned traditional earnings metrics entirely, focusing purely on growing Bitcoin per share. They've effectively created a corporate black hole for digital assets. But we have to admit, corporate integration is a brutal double-edged sword. Trump Media recently posted a massive $405.9 million net loss in their first quarter. And a really significant driver of this bleeding, markdowns on their Bitcoin and Chronos holdings. It is a stark reminder that putting volatile digital assets on a corporate balance sheet is definitely not a guaranteed path to profit. So the million-dollar question for this explainer is this. Is all this explosive institutional growth a foundation of solid concrete, or are we looking at a powder keg just waiting for a spark? We've got massive corporate adoption and silent Wall Street profits. But beneath the surface, there's a really dangerous, tangled web of leverage. If the global economy shifts even slightly, the dominoes are going to fall, and they'll fall fast. The data exposes exactly how fragile this system actually is. Check this out. If Bitcoin drops just $5,000, which, let's be real, is a completely normal Tuesday in the crypto markets, over $6.56 billion in long positions would be wiped out instantly, just vaporized. The market is incredibly top-heavy right now, tightly coiled and sitting on a literal ticking time bomb of leveraged bets. Adding even more fuel to the fire is a stark technological warning. Avalanche founder Emin Gün Sirer recently issued a very severe caution, saying that Bitcoin is heading toward a catastrophic security crisis. He is arguing that the underlying mechanics securing this entire trillion-dollar network are facing a fundamental mathematical threat that honestly has nothing to do with price volatility. The math behind this crisis is pretty simple, but it is brutal. Every 4 years, Bitcoin halvings slash the rewards given to network miners. So as those rewards march closer and closer to zero, miner profit margins are just getting crushed. Soon, network security is going to depend entirely on transaction fees. The pressure is so immense right now that 7 global mining giants has literally been forced to band together behind a new protocol called Stratum v2, just to survive the rising difficulty. And it's not just the code. Real-world threats are compounding at terrifying speeds. Physical crypto attacks, meaning actual in-person violence to steal digital assets, have hit a record $101 million in losses. At the same time, a highly sophisticated Brazilian Trojan is actively hijacking WhatsApp to spread phishing attacks. Even public figures like British sprinter CJ Uja are getting swept up in these seed phrase scams. The threat vectors are absolutely everywhere. Interestingly enough, while these immediate threats are skyrocketing, some industry insiders are actually pushing back on the sci-fi terror of quantum computing. A lot of people claim quantum computers could break Bitcoin's cryptography by 2030, but the CEO of BitGo, he completely dismisses this as pure marketing, just companies profiting off of public fear. He argues the real dangers to our digital wealth aren't supercomputers at all. They're human error and privacy breaches. And that perfectly bridges us into the massive, escalating global privacy war that is erupting right now across international borders. We are witnessing a high-stakes clash of digital power. On one side, you have the world's largest communication platforms like Telegram and Elon Musk's X, and on the other side, you've got sovereign governments desperately trying to regulate, control, or just outright extract the data flowing through them. Telegram founder Pavel Durov has impartially laid out some pretty explosive allegations regarding this whole dynamic. He's accusing the French government of glaring hypocrisy, basically committing the exact same digital privacy violations they're legally throwing at Elon Musk's X. Durov claims France is illegally collecting personal data, extracting it from automated systems, and violating the secrecy of electronic communications. The fight for data sovereignty is seriously escalating. Now, as this privacy war rages on in the digital realm, a really dark macroeconomic cloud is gathering in the physical world. This impending macro storm threatens to violently disrupt global markets, traditional finance, and crypto all at once. That silent institutional accumulation we discussed earlier, it's about to face the ultimate stress test, driven by forces completely outside the control of any algorithm or blockchain. Top market analyst Tom Lee is warning of a severe 2026 reckoning, and the pressures are massive here. We're talking looming global oil shortages and a brand new Federal Reserve chair about to step right into the fire. Yet somehow, amid all this geopolitical chaos, the world's largest oil company, Saudi Aramco, just posted higher first quarter profits despite the ongoing Iran conflict. The global energy and monetary systems are flashing bright red warning signs right now. In direct response to this approaching storm, U.S. politicians are actively mobilizing to secure financial supremacy. From Donald Trump declaring that banks won't stand in the way of America's crypto future, to Senator Cynthia Lummis aggressively proclaiming that the U.S. will lead digital innovation, lawmakers have finally realized a really stark truth. Whoever controls the digital asset frontier controls the absolute future of the global economy. But behind closed doors, the battle for domestic control is incredibly cutthroat. Former Binance CEO CZ recently claimed that rival U.S. exchanges actively opposed his presidential pardon bid, specifically just to keep Binance blocked from the American market. Simultaneously, lawmakers are racing to pass the Clarity Act, which is a sweeping piece of legislation designed to yank crypto trading safely back onto U.S. soil. Let's look at the timeline, because we are entering a critical 72-hour window in May 2026 that could completely upend the global monetary environment. On May 14th, the Clarity Act heads to a Senate vote. Then on May 15th, the Powell era at the Federal Reserve nears its end. And right after that, on May 16th, Kevin Warsh could step in as the new Fed chair. This is just a massive, rapid-fire convergence of systemic shifts. Adding pure volatility to this whole mix are some major upcoming market catalysts. Pending CFTC approval, the CME Group is preparing to launch direct Bitcoin volatility futures on June 1st. Think about that. You will literally be able to trade the chaos. Furthermore, institutional walls are completely collapsing. We're seeing executives from BlackRock and Ripple publicly uniting alongside CZ at Binance's global virtual event. Despite the staggering risks we've covered, the $6.5 billion in potential liquidations, the minor security crisis, the macro turbulence, the long-term outlook actually remains shockingly bold. Analyst Tom Lee predicts that after the storm passes, we're going to see one of the biggest S&P 500 rallies of our lifetime in 2027, with Ethereum potentially hitting $12,000. Though for fairness, it's worth noting Lee's own portfolio was recently down over $6.3 billion on Ethereum. The conviction is definitely there, but the path forward is going to be brutal. Binance's CZ echoes this immense, almost gravitational bullishness. Dismissing all the short-term noise, he's predicting a coming super cycle where Bitcoin reaches $500,000 to even $1 million per coin. His vision outlines a world where sovereign nations literally start stacking Bitcoin in their central bank reserves, eventually driving it to flip the market cap of physical gold. It's a complete paradigm shift in how we define sovereign wealth. Ultimately, the gears of the world are turning rapidly, while most people aren't even looking. Institutions are hoarding supply, governments are fighting tooth and nail for data control, and the global macro environment is absolutely bracing for impact. Which leaves us with one vital question to ponder long after this explainer ends. As the rules of global finance are permanently rewritten, will you be a casualty of this massive shift, or a beneficiary? Thanks so much for watching. Keep your eyes open and stay focused.